I want to start by talking about how you get to make money as a business owner, because this is a concept that took me a long time to learn, and you don't hear a lot of people talking about this because most people think that when you start a business, the money that you make is the money that your business makes. But that's not true. Think of it this way. Let's assume now that you build a business. Doesn't matter what the product is, we'll talk about that later. You start a business and it's making $100,000 a year, and out of the $100,000, it costs you $40,000 to run your business. That's your operations costs, your marketing costs, your product costs. It costs you $40,000 in costs, expenses to run your business, which means at the end of the year, your business has $60,000 in its account. This is what a lot of people, most business owners, consider their income. That money that's left over in their account is your money. But when you're running a business like this, you're not actually running a business. You're really just running a lifestyle brand. You created a job for yourself. Now, that doesn't mean it's a bad thing. However, it's not a real business. And this is where now you have to understand the three ways that you can get paid as a business owner. And the three ways are: number one, through your salary; number two, through your profits; and number three, through your equity. Let me walk through these three things, because if you really want to build a business, what that means is now you have the ability one day to separate yourself from the business. You can fire yourself as a CEO, you can hire somebody else, and now you still own the business, you still get the profits, but you're not involved in the day-to-day decisions. And this is a different way of thinking, because most of the time when people think about starting a business, they think about creating a job for themselves. But if you really want to build a business, that means you're creating something that you can walk away from. You're building something that you can sell and that can continue to operate even if you're not there. Or in the most extreme case, you're creating something that if you died, your family would get, and your family does not have to operate it, but they're still getting paid from the business that you created. So now how do you do that? Well, that means number one, you have to understand that the work that you're doing inside of the business is for a salary. It's not for the profits. The profits that you're getting are for owning the business. That's your cash flow because you have the ownership in the business. The salary that you're generating is what you get for working in the business. Now, if you are a solo entrepreneur or you just got a couple people working for you, well, now you are going to be working on everything. And you might feel like, well, I'm working hard to run the entire business. All this money should be mine. But if you really want to build a scalable business, you need to make sure you're reinvesting this money back into the business. That way you can scale it so you have operations, you have systems, you have people working to run the different parts of the business. That way it can run without you. So the first thing you have to understand is the salary. If you want to build a real business, you want to get to the point where you can start paying yourself a salary. In the same example, let's assume the business makes $100,000 a year. You have $40,000 in expenses. That means you want to get to the point now where you can start paying yourself maybe a $30,000 a year salary. It might not seem like much because now you were paying $60,000 to yourself. Now you're only paying $30,000, but the other $30,000 is profit. Now, there's a couple benefits to doing this. The first benefit to paying yourself a salary is what I was just talking about. Now you're treating yourself like a real business. You're paying yourself a salary, and you could potentially hire somebody else to do your work for you. Maybe not for $30,000, but as you scale, maybe when you get to $500,000 or $1 million or $10 million a year in revenue, you will be able to have enough income for yourself, enough salary that you could pay a different CEO to run it. But the second big benefit here is a tax benefit. And this is where now, I don't want to go too deep into the tax side, although I am an attorney, I'm not your attorney, but I want you to understand that if you classify your business as an S corporation, what that means now is you get to pay yourself a salary, and now you get to pay your FICA taxes, your employment taxes on only your salary. What does that mean? So now you have $60,000 worth of profit. On the $30,000 you pay yourself as a salary, that's the only income that you have to pay employment taxes on. Versus if you pay yourself all $60,000 as an LLC, well, now you have to pay the employment taxes on all $60,000. So you can get a little bit of tax benefit by paying yourself a salary and paying yourself a separate profit. And you have to do this through a S corporation. This doesn't mean you have to go out and create an S corporation. You can be an LLC that's taxed as an S corporation. I know this is a little bit of technical jargon. You can talk to an accountant who can help you with this, but that's one of the benefits that you get for paying yourself a salary as well. But now, the second thing you have to understand is you as the owner get the profits. See, the profits of a company, the cash that's left over in the bank account at the end of the year, that money goes to the owners of the company. Now, if you're the only owner, that money comes to you. And this is where you have to make that tough decision, especially as you're growing. What do you want to do with these profits? Do you want to take the money and go out and buy a nice car and live a good life? Or do you want to take the money and reinvest it back into the business? Or I guess option number 3 is, do you want to take that money and go out and invest in rental real estate or invest it in the stock market? And this is a very tough question because there's no real right answer. If you want to scale your business as fast as possible, as big as possible, then you want to take that money and put it back into the business. That means you're not going to have a lot of money left over for yourself because maybe you're paying yourself a small salary, but all your money is going back into the business. When I first made $1 million in a year, it was a crazy feeling to see that much money on my P&L, my profit and loss statements, that there's $1 million that hit my bank account over the year. But in my personal bank account, my business bank account made over $1 million. My personal bank account only got $20,000 because the other $980,000 went right back into the business. And that was a really weird kind of revelation for me because I remember before that, I was looking on Instagram and I would see people talking about how, I made $300,000 this year and I bought myself this BMW i8, which at that time was a car that I really wanted. And you hear people talking about, I made $300,000, $500,000, $700,000, and they're buying these exotic cars. They're flying in private jets, living this crazy lavish life. And here I was making $1 million now and having very little to personally show for it on my personal expenses because I took home very little money. But the reason why I took home very little money was because I wanted to reinvest that money back into the business. That way I could build it into something bigger. Now you got to figure out what the right balance is. How much are you going to pull out for yourself and how much are you going to reinvest back into the business? But then you also have the third option, which is, how much are you going to be investing into things like stocks and real estate? And I don't have the right answer for you, but I'll just tell you what I do. What I do is I treat myself like an employee. I get paid a salary. Now, I take that salary that I get paid, and that's the money that I'm using to passively invest into a lot of different assets. Now, if I do pay myself a profit distribution, that's money that I'm generally going out to invest in real estate or invest in other places actively. But most of my money now is being reinvested back into the business because that's where I can see the fastest growth and the fastest opportunity. Now, that also comes with the most risk because my business could go bankrupt tomorrow. And that means I lose all the money that I put in. I use all the profits that I put in. I lose all the time that I put in. And I still have all the contracts, like my rent and all my other bills that I have to pay. So there's risks with every single one, and that's one thing that you have to think about. So those are the 2 ways that you get paid out of the 3. You get your salary, you can work to get the profits, and you also get to decide now what you want to do with those profits, if you want to do a profit distribution or whatever it is that you want to do, if you want to reward your employees with that. But the third thing that you get is your equity. If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide on how to start generating passive income for free. All you got to do is click that button right over there. Thank you for watching, and as always, keep hustling.